Hello traders. If you have ever taken a trade and watched the market hit your stop loss and then move exactly in the direction you predicted, this video is for you. Many traders actually analyze the market correctly, but they enter too early. The market often creates movements that look like the perfect entry, and that is where many traders get trapped. Why? Because the market needs liquidity. In trading, this is known as inducement. It's when the market encourages traders to enter positions before the real move happens. Okay, in this video, I am going to show you how inducement works, why it causes many traders to lose, and most importantly, how you can learn to wait for the real setup instead of entering at the trap zone. Once you understand these concepts, you will start seeing the market very differently, and it will help you become more patient and more precise with your entries. Make sure you watch this video until the end, because the last example will show you exactly how traders get induced before the real move happen. Without wasting much time, let's jump right in. This is an example of a movement. We had this short candle and then we had an explosive candle up. Thereafter, we had another short candle. What did we create down here? This is a fair value gap. So a lot of traders, or most traders, are going to wait for this market to tap into this fair value gap, and they will start looking for buys opportunities, which is very much okay, but that is where people go wrong. Because look, when this price come down like this, it tapped into the fair value gap. This was a fair value gap. Remember, here we had only 3 candles. 1, 2, 3. The space between 3 candles is what we call a fair value gap. What happens if another candle come and taps into this fair value gap? The space that remains, it is no longer called a fair value gap. It is called an imbalance. It means the market has come back to rebalance the fair value gap. But now that the fair value gap was not filled fully, it left another space. So that space is imbalance. What does that mean? It means the market will keep on coming to that space until it is fully filled before it can fly away. So when the price came, look at this space. Initially, we had this entire space to this level here. This is what we used as our fair value gap, FVG. Okay, now after having this FVG, price has now traveled. After this candle finished printing, another candle came and tapped into the FVG. After tapping into this FVG, it never traveled all the way back to fill the gap. It bounced off this area and left. When it left, it created some break of structure. For most traders, they have said now this FVG had been balanced and now they're looking to enter probably from the newly formed lower time frame fair value gap. Okay, which is the first trap. Why? Because on the higher time frame we still have an imbalance below, and below that imbalance we have an inducement. This is where majority are going to place their stop losses, because if they are going to enter buys from here, they are going to put their stop loss at this candle below, hoping that, for example, if this market is going to react, let's say if this market is going to come like this, they are hoping that this fair value gap will be filled and then it will take their orders up so that they can profit from it. But far from it, the market is not going to react like that. Most of the time, the market will do completely the opposite of what you have planned to do. Okay, now that price, when it came down, it failed that fair value gap that he did created here. Here, you see, we had a fair value gap here. This fair value gap, once it has been violated, let me enlarge like this. Once this fair value gap has been violated, these people will say, now look, after we have violated this fair value gap, what do we have? We have another fair value gap here. So it means the bias has changed. For them, they will call this their change of character, which is wrong way of reading, because the market is just coming down to rebalance this imbalance that it left below here. Remember, we started from a fair value gap, which was all the way to this level here. The first candle, when it came into the fair value gap, it reduced it, and then we remained with some imbalance, which was up to this level. Okay, that is stage 2. So this was stage 1. So stage 2, we had an imbalance that has been tapped into, the liquidity has been taken out. So now those guys who entered way early from this imbalance, there's this fair value gap that was here, so they did put their stop loss down here, hoping that if the price is coming, the farthest it can go is to close this fair value gap and give them their profits. Unfortunately, they've been taken out. So what is now lingering in their mind is that the bias has changed. Now they want to get back what they have lost as much as possible. They're going to trade from here and put their stop loss somewhere here, saying now if this market is going to go back to this fair value gap, it is going now to take their orders down. Probably they are going to aim this level down here, saying now we are going to recover from the losses we've made, that is 1 to 2. Fine, they're going to do that, but eventually the market may or may not work in their favor. So now, after we have had this fair value gap reduced to first imbalance, and now the market has tapped here, and then we are waiting to see if this imbalance is going to be cleared. Once we find the market clearing the imbalance, we will jump to the lower time frame and look for our entries. Okay, we will wait to see if the imbalance is going to be filled fully. But now, when we were waiting, we see the market again reverse up. What is it going to do? It is going to pick the orders of these people, probably who have thought that maybe it is fetching their orders from here to deliver them downstairs. We do not know. So this happened. The market did not go up. It bounced off and then came. What happened? It has closed this imbalance fully. Okay, now once it has closed this imbalance fully, this is the time that we need to jump in and look for entries. So if we look for entries on the lower time frame, do you know where we're going to take our profit? Our take profit will be at this higher time frame point of interest. So that will be a 1 to 3 if you're trading from the higher time frame. But when you do from the lower time frame, it's going to give you something small like this, because your entry will be very precise. So it's going to give you at least 1 to 10, 1 to 15, 1 to 11. You will see practically when we go to the charts, you will have to see how important this is. It might take you 2 days, 3 days, 4 days, or even a week to wait for this setup to really materialize. But once it materializes and you enter, it's going to give you a very good risk to reward, and it's going to save you a lot of drawdowns, because you are not going to start guessing, am I going to buy from this level or am I going to sell from this level? Yet the higher time frame imbalance is still active. We need to find that level being filled completely, and then from here now we will assess what does the market want to do. If you lose at this point, it is fine, simply because you have waited for your setup, and what it has happened is it has failed you, which is fine. So you would have just lost one instead of you trading from this level. That's first loss here, second loss here, third loss. By the time this setup is happening here, you have lost your confidence in entering the market. So you will wait and see the way market prints towards your direction, and you will say, I wish I had entered that trade, I would have profited from it. Therefore, without wasting much time, I want us to go to the real charts, and then I will show you exactly how this is applied. All right, this is GBP USD. We are on a daily time frame, and clearly you can see we are on an uptrend. We are on an uptrend, and I want to show you how I caught a good RRR, roughly 1 to 14, just using the very same simple strategy I have showed you. Looking at it this way, the market started from here, it went up all the way. So I want us to mark all the fair value gaps at the bottom, because you need really to trade from the discounted zone. So I'll measure like this, and then I want to get the PDRA. this PDRA will tell me where I am supposed to start looking for buys. So any fair value gap above the 50%, I am not interested to do anything with it. And any swing within the 50%, I am not going to trade from there because that is pure liquidity. Any swing that is around this area, it is pure liquidity. So if anything, I am going to trade the other part of this side. I measure twice like this, so I will avoid this side. So the side that I'm willing to trade within, it is this lower side. So actually the market came to the lower side, and here I am willing to enter my positions. So what is happening? After I have done that, I will delete the upper part. I will delete this upper part, and then I will remain with my lower quadrant. This is the part that I need to trade from. Once the market taps anywhere around this zone, I know it's a very optimal area. So before that, I want to mark the fair value gaps around this area. So the fair value gap is this one from here. This was a fair value gap. Let me mark it as a fair value gap. And then down here, there's nothing much because this is very low quality fair value gap because it is not even there. So this one is very, very much visible. That means the big boys placed their huge orders at this fair value gap. Let me enlarge like this so we can be on the same page, showing you exactly how I do this. So as I explained earlier, if the fair value gap is tapped into by the first candle, what do we have? We have inducement. So you can agree with me, the fair value gap was up to here, but the moment this candle came into the fair value gap, it created inducement, and we did not have a fair value gap. From there, what did we have instead? We had an imbalance. Okay, so are we supposed to enter trades from there? No. Why? Because there is still imbalance to be dealt with. Okay, another candle came and closed here. It reduced the imbalance, but did we have a chance to buy from this zone? No. Why? We are still within the inducement zone. This candle forms. What does it create? Another inducement. It is just trying to bring people into entering early buys, because this rejection tells you, look, we are rejecting the zone. The first rejection was here, that forms a bullish setup. So people entered thinking now it is time for us to go up, but instead it came down and crushed them. And then they have this rejection, and here they say, okay, now we got it. Unfortunately or fortunately, maybe they got it or not. The thing is, we are going to wait. This is the imbalance that we have at the moment. So are we supposed to enter simply because we have seen this huge candle forming up? The answer is no. Why? Because this candle has gone up and it has reached this point already. So once it has taken out this liquidity, anything can happen. This price can come back to rebalance this level. So it's very risky to trade from that area. So what do? You wait. So how do you wait? You wait up until you find this price balancing this imbalance. So it has gone like that. It has gone like that until when this price came down, just follow it closely. It took out this inducement. So after taking out this inducement, what did we remain with? Another imbalance. Okay, another imbalance. So we have moved from this inducement, we have created another inducement below here. This is another inducement. You can agree with me that this is another inducement that we have just generated, simply because the imbalance is still active. So anyone who entered buys from this, saying now we have rejected this zone, we have numerous rejection, you can see, okay, the price is moving up, now we are ready to buy this market all the way to, I don't know, the skies and all that. It never happened. Why? There was still higher time frame imbalance to be rebalanced down here. Okay, but what of this now? This is the ideal time for you to look for entries. Why? We have rebalanced this level. So once we have seen this price travel all the way down here, we no longer have any imbalance. It means the price has rebalanced everything and it has tapped into the demand zone. Okay, demand zone. Okay, now there's no more imbalance. So now you can delete the imbalance and say we have tapped into the demand zone. So once we are here, remember we are on a daily time frame. This is day one, demand zone. Okay, now when you are on a higher time frame, POI, you move to the relevant lower time frame to mark the structure and identify the entries. So from daily, you can mark the structure either on 1 hour or 15 minutes. Okay, now I want us to move to 1H and see what structure are we seeing around here. Before we move to 1H, we need to identify the liquidity levels that this price might be targeting next, because that will now inform your take profit. Okay, looking at it, assuming this market wanted to proceed down, where do you think is likely to tap before it comes down? It ought to tap this fair value gap, because this is the daily fair value gap that it has just created above here. This is where we anticipate to see price tap into before rejecting. Assuming it wanted to reject and come to take this level and then go back, tap into the fair value gap and then proceed down. So we want, by the time this price is tapping into this fair value gap, we are out, because the market can do whatever it wants to do. So we say this is our liquidity level that we want to exit at. If we get an entry here, our take profit is here, and nothing more, nothing less, nothing more. If the price takes us out, fine, we will accept our fate. If it gives us 1, 2, 3 at this zone, it's okay. We are going to accept whatever the market is giving us. If it gives us 1 to 40, why not take it? Okay, so now let us go to 1 hour and mark the structure. On 1H, we want to mark the structure clearly, because we have tapped to the demand zone. We want to see, does the structure agree or it doesn't? This is the first sweep of liquidity into the point of interest. After that, we expect to see a change of character. Okay, and the change of character has to be impulsive. We've seen the change of character. Okay, this is number 1, number 2, number 3. Number 4, we need to see a fair value gap, because market is always seeking to rebalance a fair value gap. Now look at this. When we tapped here, we had this huge candle form up, but there's no fair value gap that formed around here. So if there's no fair value gap that formed, you look to the left. You want to see, is there any fair value gap that was violated? Oh yes, look at this explosive candle down. It left a fair value gap here, which was a bearish fair value gap that deceived a lot of people that we are continuing bearish. So they placed their limit orders here to continue selling the market, because they have seen we have a lot of selling pressure down. But what happened to them? They were swept. So now it means this is where the big boys decided to manipulate the market. So their orders are within this level. Their orders are within this level. So you mark it as your inverse fair value gap. You must know how to hunt for these setups, because that is what separates the average trader and the profitable trader and the losing trader. So you need to understand at what level are you. So at this level, you have seen the inverse fair value gap. Now, we are supposed to trade from demand and supply. Now, we have inverse fair value gap. So what do we do with this inverse fair value gap? Is it going to be touched and leave some imbalance, or How do we treat it? Now at this level, because you are on 1 hour and you have noticed that we have inverse fair value gap, you go to the lower time frame, like 15 minutes and 5 minutes, to find a demand zone within the inverse fair value gap. So we go to 15 minutes first. This is 15 minutes. So I want to hide this part like this, so we can look at 15 minutes clearly. Remember, this was our 1 hour inverse fair value gap. But on the 15 minutes, what do you see? You find that we have a very clean fair value gap that has not been mitigated. Okay? So, two confluences are aligning. We have a fair value gap that needs to be tapped into, and we are within the inverse fair value gap. And what do we have inside? A very beautiful last opposite candle before we head this move up. So are we gonna take into consideration this imbalance down here? The answer is no. Why? This is a lower time frame noise. It is meant to mislead a lot of people that, look, this is the true demand zone, so place your limit orders here. Place your limit orders here. The market will come down and tap into this level and activate your orders. Okay, so they will mark this as their inducement here. They'll mark this as their liquidity. They'll call this their imbalance, and then they expect the market to come down here to do what? To tap into their order. But does this align with the higher time frame? The answer is no. So if it does not align with the higher time frame, then we do not regard it as a very good setup. So now instead, I am going to use this level here to here that I have found aligns so well with these imbalances, because I know if the market is coming to clean everything, the farthest it can get is the end of this imbalance, and then it will go up, because the market is always looking to rebalance the imbalance it has left behind. So if I put my stop loss anywhere down here, I'll be safe. And if the market wants to take the stop loss out, then it means there is no need for me to keep holding on to the trades. It's rather takes me out, and then I will look for another setup. Okay, so now I have found my what? I have found my demand zone here. This is my demand zone. Okay, now I will delete this, and I will delete these imbalances. So I will have my fair value gap and my demand zone. So when the market's coming to fill this gap, I am going to be triggered in. Okay, and is there any liquidity around the zone? Hell yes, there's liquidity. There is liquidity here. This is liquidity. This is liquidity sitting above the imbalance, and then below it we have a very beautiful opposite candle. So if anything, you would want to extend your stop loss to this candle. Farthest it is this candle, but even at this level you're fine, because you know the market is coming for this imbalance and it has no business down here. Okay, now I put my entry here. Okay, my stop loss here, those are 7 pips. And then our take profit, we are going to take our take profit at the daily what? Daily fair value gap, because we know if the market taps here, it might reverse on us. So we want to be at that level whereby if it decides to come and take this level out, where is it going to find the anchor? It is going to find the anchor at this fair value gap. Okay, so once it gets here, we don't want to know if it will proceed up or it's going to reverse. The thing is, we want to bank our profits and disappear from the market. This will give me 1 to 19. It might take days. I don't know how many days that took, because I never held that long. I took my profit somewhere around here, but this was my entire prediction. I knew that the market was likely to get to that level. So look at that beautiful entry. We were tapped into this trade. I want to show you clearly how that happened. So we were tapped into this trade, and then the market ran ran, and then boom, we took our TP at this level. So once price got here, what did we have? We had a very huge reversal down like this. So that tells you, if you align your setups with the higher time frame, you are not going to find your setups every day. But once you get it, it means it's going to reward you handsomely. So I want us to check how many days this would have taken. It's around 2 days if I'm not wrong. Let's see, from the time it was entered to the time it materialized, this was 1 day and 22 hours. So 1 day and 22 hours, you have made 19% of your account. So think of it. If maybe you are using your ProFarm account and maybe you have just a 10K account, you are risking 1% of that ProFarm account, which is 100 US dollars. So if you risk 100 US dollar and you have waited for your market to give you the signal, and after 2 days roughly, because that is 1 day and 22 hours, it's almost 24 hours, which was literally 2 hours to clock the two days, you have made 1900. That is 1,900 US dollars in 2 days from an investment of 10K account, which is, achievable. Almost everyone can afford that. So is it not a very good risk to reward? Yes, it is, assuming you decided to take your profit earlier, because I will tell you why I decided to do that. I saw this level here and I knew the market might want to tap into. Let me show you what was running through my mind. This level here, look at this level. It had rejected price for quite some time. So this tells me there were so many orders being rejected here, okay? And these orders were absorbed aggressively by these, red boys. So that tells me if this price comes down here, these buyers who were overpowered might decide either to allow this price to go up or decide not to participate fully. And if they decide not to participate fully, what will happen? We will have a drop in price. So now I decided, let me take my profit at this level. That is how I reasoned, and I took my TP at this point. That was 1 to 15, and I was okay. I was okay at this point here. Yes, because I knew price is likely to get there, but before it gets there, then I wanted to see what any other reasons do I have to exit the market early. If there is a reason for you to exit the market early, why not? Provided you've made your risk to reward that you were looking for in the market. You see, this is one trade that you see from the time it got activated. It just went up straight without retracement. This is how I managed to get 1 to 15 risk to reward. And this brings me to the end of today's video. If you found this helpful, make sure you like this video, leave a comment below, and subscribe to the channel, because I am on a mission to reach 1,000 subscribers. And once we hit that milestone, I'll be doing live market analysis, showing real setups, entries, and trades in real time. If you want to be part of that and never miss a live session, hit subscribe and turn on notification bell. Let's reach 1,000 together and start trading smarter as a community. Bye bye. See you in the next one.